Good afternoon, everyone, and welcome to this really beautiful event where we're talking about investing, and there may be some really cool investing opportunities in the market. As you guys know, investing is not literally and investing parameters, and investing is for the astute trader or investor or technical analyst. These investing opportunities do not come literally every day, even though when you have an IRA account or when you have a Roth IRA account or when you have a 401k account, especially for 401k accounts. And I do have a big surprise for you guys tomorrow because I did prepare another webinar where we're going to talk about what kind of account should we open. Is a 401k a good decision? Is it not a good decision? So we're going to talk about, I'm not going to divulge a whole lot of details there, but I have prepared like a whole different webinar for tomorrow, which is very exciting. So let's get started with today's presentation. Investing in anything that you can trade, right? Stocks, ETFs, cryptos, even commodities, right? So all of these are assets where you can find trading opportunities. And I was saying earlier that trading opportunities may not come every single day. If you have a 401k account, the moment where you open that 401k account, that moment they're going to allocate your funds and they're going to put you in some stocks, their mutual funds or whatever it is that they're deciding to put your money into. And you have very little decision over it. And for the person that really doesn't understand what's going on in the market, you may be buying at the very high. Well, I specifically designed a swing trading and investing course. Guess when? At the end of 2008. And this is literally our flagship course that we have. And I helped so many traders, literally thousands of individuals, flip their money around. And a lot of them were desperate in 2008, very similar situation to what we have right now in the market because of the pullback and the narrative that we have out there. But there comes a time when rotations are possible. All right, so we're going to talk more about charting and more about that today. And we're going to continue our discussions into tomorrow and on Thursday. So, quick disclaimer, all information provided by us is for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of security, options, futures, forex, or any instrument of any kind. If you guys want to read more and find out more about Trade Out Loud, you can hop to our website. It is TradeOutLoud.com, and you could go to our social media pages. For those of you that are new here and have not heard me, or if you guys are hearing me for the very first time, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com. Trade Out Loud is a boutique company that is specialized in educating individuals how to day trade, swing trade, and invest, and also actively invest in the futures and the equities market, but not solely into those two markets. I've been doing this for over 20 years professionally. I also have 10 plus years in investment banking, also run a swing trading service for stocks and ETFs since 2010. I have been doing a lot of pro bono work from 2008 to 2010. And then in 2010, I decided, hey, I'm not going to do this for free anymore because I got so busy at one point. I was literally all over the place. I was doing all of these like info market mini luncheons for companies around the Detroit area. And I was literally, just putting my time into it because I literally wanted to help people. And I was doing everything for free. So in 2010, I decided, you know what, it is my time. So my time is very precious. I also run a trading room for futures since 2017. And also for these two services, we do have track records that date to the time of the inception. If you go to our website, under each of the services, you scroll to the very bottom of the page, you have transparent track record of all the trades, the good, the bad, and the ugly. So we're also offering we also offer trading education for swing trading, day trading, and of course for investing and active investing. I specialize in high velocity trades because I like to pinpoint and nail that specific rotational point on the technical chart. I'm 90% technical trader, 10% fundamental trader, and I like to focus on those inflection points that deliver strong momentum. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, but there's a catch, because when I look at price support resistance, I just don't look at those horizontal lines, price support resistance. No, I literally have 8 layers of price support resistance that I look at. I also pay very close attention to specific trigger times when I'm day trading, because that is essential. You have to know when to buy precisely in order to be in sync with the momentum. I also look at these specific price zones, that this is valid for day trading, swing trading, and investing. These are specific price points where institutions leg into trades. I also pay attention to chart synchronicity and divergency, which means that I want to be in sync with the momentum. For example, in the market, we're going to get to that a little bit later today, and I'm going to get more into technicals in my presentation on Thursday. And I respect trading rules. So if it's not in sync with my game plan, with my trading plan, I don't take the trade. So I would rather miss a trade than have a losing trade. So I'm very, very picky when it comes to trading. And of course, I have developed a 10-point scoring system to enable myself and my traders to start identifying trades with ease. My motto has always been, make your money work for you, especially when you have a job, or if you, for example, are like me and I'm a day trader. So because I'm a day trader, I have an income producing style of trading. I'm trading an income producing style. So that means that at the end of the month, I am taking out the profits out of my account, from which I'm paying my bills, I'm, buying whatever I need. And then the rest of the money, I actually relocate into my swing trading account or my investing account, because that is the wealth generation. So by then, this is the secret to investing. Whatever you have left over from paying your expenses and every, day-to-day life, just put that money to work for you. That's why you have to make your money work for you, because you're going to get a lot more this way by compounding. We're going to get more into that as we're getting into the next presentations. But for today, we got to talk about what is investing, right? What is investing? What are the timeframes that are investing? Is investing technical? Is it fundamental? I mean, what is investing all about? We're going to talk the difference between trading and investing. And we're going to talk about investing basis. We're going to talk about what makes a winning trade. So let's get started. Guys, you guys can see this panel right here. This is the 22 year-to-date performance. No, it's not my performance, but it's the market performance, the 2022 year-to-date performance. Take a look at these very steep pullbacks that we've been having into the market. Amazon lost 31.7%, Tesla lost 31%, Google lost 24%, Microsoft lost 24%, Apple lost 17%. There are a lot of companies that lost. However, there are still companies, you could see this little sector right here, the energy sector, thrived, right? Thrived through the crisis, and everything else thrived. So here it is, XOM gained 40% this year. So you can imagine if you've invested at the beginning of the year, because you have to pay attention to the narrative. You have to pay attention to technicals, right? So if you invested in XOM, 40% return in almost half a year, 6 months. Also, CVX, also Chevron, right? 18.9%, COP, 19%, Oxy. Wow, a whopping 107%, right? 107%. Do you guys remember when it's trading at $8? Wow. Okay, take a look at it now. So you can see all of these stocks right here, all the energy stocks. So when you're looking at the market, there's always going to be a rotation at one point. Do you think that we're going to end the year like this? Maybe, or maybe not. But in some cases, what happens is there's a rebalancing that is occurring. So money from the energy sector can go back, let's say, into the financial sector, or money from the financial sector can go back into the healthcare sector. You can see that the healthcare sector is pretty impressive and pretty strong here, ranking at number 2, after which we have the consumer defensive. All right, just wanted to give you a quick snapshot of how the heat map looks like as of, let's say, 6 months and 2 weeks Synopsis. So I want to take you guys, are you guys up for quick quiz time? Quick quiz time. All right. I know it's lunch. You probably had lunch. I'm feeling a little, tired right now, but like, hey, let's get to it. What is your investing IQ? Let's see where you're at in your investing IQ, right? So it's quiz time. All right. So first question, what is the number one rule in investing? Number one, don't lose money. B, is it you can never beat the market? Is it C, timing has nothing to do with investing? Or is it D, pigs get fat, hogs get slaughtered, right? I guess you guys know the answer, right? It cannot be. Timing has nothing to do with investing. Are you kidding me? Right? You need to have the proper timing, right? Remember that 401k example that I've been telling you guys? That 401k example that I've been telling you guys, or they just throw money into the market. Imagine if you, and I'm gonna tell you a quick story, but that's tomorrow, about my personal experience with the 401k this year, right? What they do, I understand the time horizon. I totally understand it. Or you're looking at 5 years, 10 years, 20 years, whatever. Okay. Depends on your age, depending on, a whole lot of factors. But think about if you invested in January, on January 1st, 2nd, or 3rd, when we had the first business day of January, and you opened your account like then, you would be down big, right? Now, I know many people do not even pay attention because they know, they don't know anything about the market. So they go like, oh yeah, it's long-term. Oh yeah, so what? It's down, but it's going to go back up. Guys, do you know that you could take an advantage of these moves? You can navigate the market to actually make money in 6 months and not lose money in 6 months, because time is the most precious commodity. Don't you want to make money fast, right? And spend your money any way you like? All right, so I see a lot of, guys, a lot of answers in here. I see A's, I see D's. Here it is, guys. Rule number one, never lose money. You know what rule number two is? Don't forget about rule number one. Yeah, so basically what this is all about, never lose money in the market, it refers to investing. Because with investing, you basically have a risk tolerance, but you really don't have that stop loss. I don't know if you guys know that. You don't have a stop loss, because over time, ultimately by price history, price is going up. Okay, but I'm going to show you a different facet of the story where you could actually have a stop. So what is the expected, this is the second question. What is the expected annual return from investing with approximation? What do you think it is? Is it 5 to 10%? Do you think it's the same as the market indices? Not predictable? Do you think it's not predictable? Or every year is different based upon the market environment? What do you think it is, guys? What do you think it is? Do you think it's A, B, C, or D? Take a wild guess here. All answers are right answers. We're here to learn. Okay, I'm going to tell you the answer. Every year is different. It's D. Every year is different, because if you look at it last year, if you look at 2020, if you look at 2021, right? Market was up, results were different. We're not into the same digits, right? But how about this year? This year, the market is down, right? So it totally depends on the market environment. Depends whether it's recession, whether we have war, whether there's geopolitical conflicts. Okay, so every year is different based on the market environment, and market environment has a huge role to play into the transition of stocks and market in general. Question number 3, what did Warren Buffett say about money managers? Okay, this is an interesting one. A, diversification is only required when investors do not understand what they're doing. B, even the intelligent investor is likely to need considerable willpower to keep from following the crowd. Or C, far more money has been lost by investors in preparing for corrections or anticipating corrections than has been lost in the corrections themselves. What do you guys think? What do you guys think the correct answer is to this question? Right? I mean, I know the diversification is a requirement, right? So we cannot be number one, right? Even the intelligent investors are likely to need considerable willpower to keep from following the crowd. No. And investing and trading is not about willpower. It's not about egos. It's about what you see on the chart. It's about what you know about the company. Or is it C? Okay, William, you got it right. It's C. Far more money has been lost by investors in preparing for corrections or anticipating corrections. What do? They pull money out of their account, right? They pull money out of their account and they think that their money is safe in a savings account. And if they have over $250,000, are they insured? Question mark. Answer, nope. So you have more than $250,000, you have to make sure that you have different bank accounts and different savings accounts for those in order to be insured. What is your money? What is your savings? If you have money in the savings account, what is your money in the savings account doing right now? Burning. They're losing their value day after day after day after day after day, right? Because of inflation, right? So where do we need to have the money into? The market. That's right. All right, next question. The best way to minimize risk. What do you think it is? 1, buy good stocks and hold them for long term. B, diversify across asset classes. Oh, this is a tricky one, right? Because you have to diversify. C, dollar cost average your investment every paycheck. Kind of crazy. William, I like that. That is E. Or William said, is it E, pray, or is it D, buy a few companies that you truly understand well and only when they're priced below their value? Exactly. That's D, guys. The correct answer is D. So buy a few companies that you understand well. You know, for women, I think it's relatively easier to focus more into retailers, right? Because, you know, we're shopping every day. We go to Kroger, we go to Publix. We go to Costco, we go to Target, right? So we understand these companies. You look at the parking lot. Is the parking lot full? Every time you go to Costco, how's the parking lot? How's the parking lot? Technical analysis on the parking lot. Parking lot is full. You go to Target, parking lot is full, right? By the way, do you guys know in times of recession, do you guys know which kinds of, you know, stocks thrive? No? Do you guys know which kind of stocks thrive? Which stocks thrive through recession? It's typically these stocks that I just mentioned. It's the Walmarts. It's Walmart. It's Costco. It's Dollar Tree. Dollar General. You know why? Because people do not have buying power anymore. So they try to buy something cheaper. So that's why they go to Walmart, they go to Sam's Club, they go to I don't know, Dollar Tree, they go to the dollar store. These stocks are going to make you money that you can hedge for inflation with those. So keep them on your watch list. All right, options and derivatives are A, dangerous ways to lose money. B, an effective way to decrease risk and increase income. C, only to be used if you know what you're doing. Is it D, all of the above, or none of the above? All right, I'm going to simplify it for you guys. I think it's one of the two. One of the two. I think it's one of the two. What do you guys think? It's all of the above, right? All of the above. They're a dangerous way to lose money. Options and derivatives are a dangerous way to lose money. An effective way to decrease your risk and increase your income, only to be used if you know what you're doing, because they're on the riskier side. Now, the average American can they save their way to wealth? Question mark. The average American can save their way to wealth. Is it A or B? True or false? True or false? What do you guys think? If we all had a job here, and if you guys were not here, because you guys are smart and you're here and you want to learn how to invest, you're probably trading right now and you are trading and you have a trading account and you can see the potential that we have in the market, right? You guys think that, let's say a person that works at McDonald's, are they going to get wealthy? No, they're not, right? So just totally false. Now, I think this is the last questions, if not amongst the last. Independent investors look at market crashes as a time to pull your money out of the brokerage account. Yeah, yikes. Is it a time to actively trade and be in the market? Or any crisis is an opportunity? Okay. You got it. You got it. Any crisis is an opportunity. When you hear the word recession, you should be drooling. You go like, oh my gosh, I got to find my list. Where's my shopping list? Your shopping list is actually your stock watch list or your commodity watch list. Okay. In investing, you make money when you buy, sell, or wait. Buy, sell, or wait. When do you make money in investing, guys? When do you make money in investing? What do you think? You make money when you buy, when you sell, or when you wait? When you wait, when you wait, right? Because investing is about long-term. You're looking at long-term, but I'm going to present today a way of investing. I call it active investing. It's literally what I did and I continue to do, and I absolutely love it. And you're going to love it as well. All right. I don't know. I think we're approaching really the last questions. When choosing the right companies for your stock watch list, pay very close attention. What should you be looking for? Number one, history of company growth. This is important, right? History and potential of growth and good technicals. Ooh, this is getting better and better, right? Right up my alley. Or when social media is chattering about a stock. Do you guys care what so-and-so on Twitter is or Facebook or whatever it is, is talking about, let's say, Amazon? No, I could care less. I don't even, I follow very few people on Twitter and I probably log in Twitter maybe once every 2 days. Do I really care what Twitter feed is saying? No. Do you think I get my investment advice from Twitter or Instagram? No, I get mine from history and potential of growth and good technicals. Exactly. What is Twitter? I don't know. We should ask Elon. We should ask Elon Musk. What is Twitter? Okay. So to get rich in the stock market, what do you think we need to do? Do we need to be economists? No, I'm not an economist. I'm not an economist and I'm making money in the market. Do you need to get lucky? Would you rule out luck, guys? When you have been down and the stock turns around, for example, when you're in a day trade, right? I mean, literally when you have something unexpected, like a tape bomb and, the price goes back up to your break even when you make money. Yeah, you get a little bit lucky. Or is it C, be knowledgeable and have patience and time? It's C, guys. So you have to be knowledgeable and have patience and time. So time horizon for investing is really wide. All right, that's why it is highly recommended. It's actually more recommended than any kind of style of trading. Investing is the process of buying assets that increase in value over time and provide returns in the form of income payments or capital gains. Now, why do you think investing is so cool? Even swing trading is cool. If you hold it for a little bit longer time, you have not a short-term or a medium-term swing trade, but a little bit longer term. And why buying the stock is so awesome versus options. Why do you think that is? They pay dividends. There are lots of companies that pay dividend, free money that go back into your trading account, right? It's all about compounding, guys. It's all about compounding. So think about this. You have let's say you have a trading account, you have an investing account, let's say of 200K. or less, 50K or whatever it is, it doesn't matter. This is just an example. And every single time, instead of getting that 401K, right, they pull their money, they pull their money out of your account, and guess what they do? You pay, and I mean, I'm telling you my experience, I pay $364 a month for them to do nothing, right? For them to do nothing. And I pay every single month. Guys, I would rather, we're going to talk more about this tomorrow. I would rather pay the taxes than have my money in a 401K. I pull my money out of the 401K. I'm done. I don't care about taxes. There are other ways in which, you know, talk to your CPA or anything like that. That's not a good option for me. I want to have my money work for me. I want to have access to my money. We're going to talk, like I said, more about that. I'm not going to get into it right now. But think about your account, right? Think about your account. So you have that $200,000 account and you can contribute, let's say $1,000 or $2,000. In 10 months, that's $20,000 if you contribute $2,000 a month. And that money, you can invest that money. You can allocate that money to a different stock, to a different, I don't know, ETF or whatever it is, or commodity that is on your list. You're going to make more money. You're going to be happy that you're paying taxes, because at the end of the year, I'm going to show you tomorrow some stats. At the end of the year, I'm going to show you how many fees and commissions you're paying. So yeah, no thanks. Okay. All right. Investing in stocks. Well, what's investing in stocks? Companies sell stocks to raise money to fund their business operations. Buying stock shares give you partial ownership of the company and lets you participate in its gain. Of course, its losses as well. Some stocks also pay dividends. I literally have dollar signs in my eyes right now, you know, like those cartoons, like with the dollar signs, literally dividends, money. Who doesn't love money? Which are small regular payments of companies' profits. Cool, right? Did you guys know that you can invest in commodities? Commodities are agricultural products, energy products, and metals, including precious metals. These assets are generally the raw materials used in the industry, and their prices depend on market demand. So, for example, if a flood impacts the supply of wheat, the price of wheat might increase due to scarcity. Buying physical commodities means holding quantities of oil, wheat, or gold. As you might imagine, this is not how most people invest commodities. Instead, investors buy commodities using futures and options contracts. You could also invest in commodities via securities like ETFs, or buying the shares of companies that produce commodities. Exactly. All right, so these are some of the commodities that you can think of. And remember, a lot of these commodities have corresponding ETFs, like gold, for example, right? So you don't necessarily have to buy a contract of futures gold. You just buy GLD, right? Silver the same way, right? Or for example, let's say wheat, right? You don't have to buy the commodity. You can, but you don't have to. So you could buy the ETF. How about bonds? Do you guys know that bonds allow investors to become the bank? When companies and countries need to raise capital, they borrow money from investors by issuing debt called bonds. When you invest in bonds, you're loaning money to the issuer for a fixed period of time. That's what you're doing. In return for your loan, the issuer will pay you a fixed rate of return, as well as the money you initially loaned them, obviously. Because of their guaranteed fixed rates of return, bonds are also known as a fixed income investments and are generally less risky than stocks. Give me a one. How many guys knew this? Give me a one. How many guys knew this? Right? Or if you didn't know, type a two. If you didn't know, type a two. All right. Let's talk more about investing. In general, financial advisors recommend you to take more risk when you're investing for a far off goal, right? Far off goal. Let's say 20 years from now. Let's say you're 20 years old, 25 years old. So you have a really far off goal to your retirement. Like when young individuals, invest in retirement. When you have years and decades before you need to make money, you're generally in a better position to recover from dips in your investment role. How about if you're 55 right now? Do you think that's a good idea to have a far off goal? Heck no. You want to live your life. You want cash now, right? I mean, seriously, you want cash now. So there's a better way to do that. And investing, I want to show you guys that there are different ways of investing. So for example, while the S&P 500 has seen a range of short-term lows, including recession and depression, it still provided average annual returns for about 10% over the past 100 years. Seriously, do we really have 100 years from now on? No. So time is precious. You got to learn a strategy that will deliver and make you money now, right? You want to create your wealth ecosystem, your own ecosystem, right? Your own wealth ecosystem. But if you had needed your money during one of those dips, you might have seen losses. Whoops, not good, right? That's why. So here's the thing with investing, right? You may have, right? So you may keep for a long time some companies for your ultimate goal, retirement, but you can also have your money work for you, day trading, swing trading, and then have an investing account. And my advice would be that if you're that active in your wealth ecosystem and generating that wealth ecosystem, to have separate accounts. Have an account for day trading. If you're trading futures and if you're trading, for example, stocks, have two accounts, separate accounts. I have separate accounts, one for futures, one for stocks. I have separate accounts for day trading, for swing trading. I have separate account for investing. Okay. This is why it's important to consider your timeline and overall financial situation when investing. Of course, you probably have seen charts like this. If you have invested in 1994 in the S&P 500, you would have a return right now and this and this and that. If you have invested 20 years ago or 50 years ago, I don't know, in Walmart, you would have like $5 million right now with only if you bought 100 shares. Shoulda, coulda, woulda. What's that going to help me now in this market context? It's not. Oh, it's good statistic, right? It's good statistics to see that, yeah, overall the price is going higher and overall there's growth because there's no devaluation. Even though you're seeing a slowdown in the economy, and even though companies, may say, hey, we got to tweak our next estimates for the next earning period, it's just a stagnation, right? It doesn't mean that it's a devaluation of the company, like Apple, right? It's not devaluating the company, okay? So take a look here from, let's say in this example, from January 2021, right, to January 2022. So for 1 year, this is 1 year, 31.24%. Where are we right now, guys? Where are we right now? We pulled back very close to this 200 estimate, very close. So we lost everything. We lost everything that we have accumulated in 1 year. Okay. So how long do I keep an investing position? Because everybody, everybody says, yeah, I'm going to buy this, I'm going to buy that. But how long should you keep it? So stocks, bonds, or commodity trades will be held from few months to a few years, depending on your style. If you don't want to live through pullbacks, at the first sign of rotation, which is very clear and evident when it's happening on a technical chart, you get out. You wait for the pullback, you wait for the buy rotational point, get back in. This way, you don't have to live through pullbacks. You don't have to hedge, right? I'm going to tell you what my mentor said about hedging, right? So he's an institutional trader. I was very fortunate to be mentored by this individual. Very fortunate. And actually he's the reason why I got into trading and the reason why I gave up my job. And I said, I'm going to make my money work for me. So I got into day trading. I was already investing and swing trading at the time, but I just wanted to have my income producing method of trading. And that was a totally different ball game, totally different animal. And I dabbed into day trading and he mentored me. It cost me an arm and a leg. I can even tell you, like, it's Harvard ×2 tuition. Okay. But it was fully worth it because I got my results and my trading put me literally above any kind, like took my trading to the stratosphere. To know what to look for, to know how to scan, to know how to identify a trade in seconds or milliseconds, to know exact entry points to the penny, to know exact stops to the penny, laser sharp precision trading. So he actually told me that, yes, hedging is a modality to counter the losses of a portfolio. But if you know you're wrong, you're doing something wrong when you say, oh, I got to start hedging, right? So that's the thing with hedging, right? There are different ways to hedge, inverse ETFs, VIX, futures. There's so many different ways of hedging. But if you're wrong, you're wrong. You're applying those tactics because the market is going against you. Okay. So basically investing focuses on higher time frames, the weekly charts, monthly charts, quarterly charts, annual charts. These are going to be the charts that will be analyzed and in play. How about active investing? Have you guys heard the concept of active investing? Okay, probably not, because I came out with this concept, right? Active investing is when you don't live through pullbacks, and you need to have market knowledge in order to do that. And no, it's not rocket science. You don't need to know math. You don't need to be an economist. You don't need to be a financial planner. You don't need to be a financial advisor. You just need to have technical skills, market technical skills. So active investing is when a trader or investor takes advantage of the market dips and initiates positions at key times and key locations, or simply adds to existing positions that they already have in their investment portfolio. Why do you think the add? So for example, let me see if I have a drawing tool here available. All right, so here it is. All right, I have a stock that goes up, right? Goes up, and all of a sudden, let's say I buy it over here. Okay, this is my buy point. I'm gonna make like a big circle. This is my buy point. I was up, and let's say my horizon is 5 years, right? 5 years. So all of a sudden the price comes down, right? Comes down. Or maybe it takes out my entry, right? And it goes lower. Let's say this stock, I bought this stock at $10 for simplicity. It ran into $15 right here. And right now it fell and is trading at $8. But I also see something happening here. What do I see happening? I see a price pocket, right? So I see a rotation pocket. Let's say it's sitting on some kind of support, or the economy is turning around, or let's say something is happening, right? Something is happening. So what do? My entry is 10, right? My entry is 10, and my price where I want to buy it is 8. So I decide that at this rotational point, let's say I want to buy it at $9, hypothetically. Let's say I want to buy it at let's say I want to buy it at $8. Sorry about that. Let's say I want to buy it at $8 at this point. So the difference between 10 and 8, right, is 9. So that means that this is bringing my average down to 9. So what is that doing? That takes me, because I don't know whether this is a recession or not, but I know that I'm catching a momentum. So if I get the price to $9, what am I going to do? Let's say you're in here with 100 shares. Let's keep it simple. When you add, you want to add the same amount of shares. So you're adding another 100 shares. So what are you doing by now? What are you doing now? So when you bought it at 10 bucks, you had 100 shares, and when it dove to $8, you just lost $2 per share. So by adding at this point at $8, you're averaging $9 right here. So at $9, you're with 200 shares. So you're 200 shares right here, right? Because you added another 100 shares. Here we go. Another 100 shares. So you have a total of 200 shares. When the price goes to $9, your 200 shares are going to bring your stop to break even, right? And if you're in a difficult market environment, this is what you can do. The lift that you've got from $8 to $9 helped you put you in a break-even situation. At this point, you can sell 100 shares and just keep the next 100 shares. Why? Because in case you get another pullback, and in case this pullback has a rotational point above or around $9, you're going to add another 100 shares here. And therefore, by the time you're going into the 15, you don't have any, you're not carrying any losses. And that's how you eliminate the losses. Yeah, it's pretty interesting, right? Very interesting. Because that's how you make your money work for you when you have market knowledge, right? So the active investor is more hands-on, looking for fundamental sound stocks, looking to follow a strong trend, looks for high dividend stocks. Obviously, who doesn't like free money? And why? Because if a stock pulls back and the account is not growing for a couple of months, you earn dividend on that income. So even when, remember that example that I gave you from $10 all the way to $8? So let's say that happened within 2 months or 3 months. Guess what? And let's say 3 months or 6 months, because we're talking about investing, you earn dividend every quarter, right? So even though you're down, if they have profits at that turnaround point, they're throwing money for you. So even if the stock is down, they're still paying you money. Okay. So here's an example of adding, right? This is Apple, right? And you can see pullback, rotational point, buy, sell point, partial sell, wait to reload or add, right? Even if you keep, for example, if you have 1,000 shares, hypothetically, if you have 1,000 shares, you can play around with 500 shares, and those 500 shares, based on, you're going to sell 500 at the peak, right? At the rotational point, because you're seeing the inflection when it's coming down. And when the price is rotating back up, what you sold here, those 500 shares, you're adding them back up. So you're whole again. So you're running with 1,000 shares again. Sell 500, you see the rotational point, sell 500, wait, rotation point again, add the other 500 back in. So you're not living through this pullback, so you're still generating money. Swing trading, right, is the sweet spot between day trading and position trading. That's investing. It generates high probability trades, and it offers the best chances of success. This is how you actively make your money work for you, by swing trading. Everything that is not into my investing account and everything that I make extra after paying my expenses on a month-to-month basis, I pull my money out. I have good account size where I don't need to grow it for my day trading purpose. I pull my money out, I put it in the swing trading, and I make my money work for me in swing trading. I'm buying more stocks, right? All right, this is my personal investment. Most of these positions were originated on an inflection point in 2016, as you can see for the date right here. These are the returns. I actually pulled this stats today, right before the presentation. I'm still up in this portfolio. I have different portfolios. In this portfolio, I'm up 160%, I'm up 150%, I'm up 31%, and I'm up 52%. What I typically do in these investment accounts, what I do is when the time comes at the peak, I sell 500 shares, I buy them back up. I sell 500. Do we have a rotation in the market right now? We do. So I'm back whole, full again. This is another one, 5.6%. So throughout time, you can see that your portfolio, even if the market is in a pullback phase, your account is, your portfolio is still growing. Okay. So we're going to talk now about who is swing trading for. Traders with busy lifestyle who want to manage their own long-term money. That is investing. So basically what you're doing is you're watching the charts maybe twice a month for investing. For swing trading, obviously you're in the market, so you're watching the market every week. For part-time traders that do not want to sit in front of the computer all day, that's me right there, hands up, because I only day trade 2 hours or less every single morning, and I'm done. I'm not going to sit around the computer because I have earned my financial independence. Swing trading and investing, swing trading is a wealth generation style of trading, just like investing. All you need to do is an average of 10 minutes a day to manage your position, scan a little bit, look at charts. You can work from home and make your money definitely work for you. So your investment accounts should be separated from your short-term accounts. Tomorrow, we're going to talk more about brokerage accounts and retirement accounts, but these are the 2 types of accounts that you can use, whether brokerage or retirement. Investment basics, determine your time horizon. So if you're right now just learning about investing, you have to understand what is your age and what is the time horizon that you're looking to invest or swing trade. What are your realistic expectations? What is your risk tolerance? This is the most important thing. What is your risk tolerance? What to look for in a stock when you're identifying winning stocks, pick them at the right time and collect profits if you know how to select them. So always, so for example, if you missed last year massive rally or 2020 was actually one of my best trading years in existence, and I came in very similar it was very similar results in 2021. Okay. This year is also good. It's very good, but I have not been trading that much into swing trading and investing. I'm just looking for perfect opportunities. For example, last week I had a trading QCOM delivered over close to 5% return. Okay. I'm still from a trade from June 27th, I think it is, in Meta, and the trade is working beautifully. So I have only these 2 trades in my swing trading account. The rest you guys saw in my investing account, right? So fundamentals need to be in line with technical. You have to buy stocks on sale, right, to get the best risk return on your investment. When to buy stocks? When you have certain events in the markets, right? Pullbacks, certain events that are creating markets to come in, right? What are these events? Whether it's the dot-com bubble, 2008 financial crisis, 2016 election, 2020 pandemic, or this recession. Do I need these events to get in? Yes and no. If you're opening a 401k, they're going to throw you in an account. They're going to throw you in a fund. If you have your own money, you're going to be picky because you love your money, because you have market knowledge. Focus on companies that will thrive and survive over the years. Be very diversified and stay away from high-risk industries, airlines, hotels, biotech. Investing or swing trading, these are the stocks that you should be looking for. Growth stocks, value stocks, income stocks, blue chip stocks, and kind of stay away from penny stocks. Growth stocks are the best. I also like value stocks. I love blue chip stocks, okay? When it comes to trading, no one has a crystal ball. It's just 90% technical and 10% fundamental. Example of high dividend stocks, I'm pretty sure everybody wants to know what are those high dividend stocks. You could actually, there are ways in which you can scan for them, but you can see IBM pays $1.63, Home Depot pays $1.50, UPS pays $1 and all that. Entries are early points in after a consolidation or run up or after a pullback. And you got to look for buy pockets for rotational points, like I showed you in Apple. So when you have those roundabout as rotational points. So Now, this is the chart of Apple. Apple is approaching a massive rotational point. It's going to be super bullish over 150 to 20. It's going to be super bullish over 150 to 20. Now, it's going to be really interesting if it's going to do that, because remember, Apple is just due to report in a couple of weeks. Okay, so learn how it's done. You need to learn how it's done. The skill will last you a lifetime. Do not rely 100% on a service. Learn how to look at charts, trade. It's a recession-proof skill. You trade from home, make money while other individuals are waiting for stimulus checks or unemployment checks, literally. What do you think is going to happen? Layoffs and recession, right? We had our experience from 2008, so we know what happens, right? 10 ways to generate income, swing trading in 2022, or investing. Let the chart do talking. Pay attention to technicals. Select the proper time frames, whether you're swing trading or investing. Don't overthink it. Become a very good technical analyst. Stay away from water cooler discussion, CNBC and all that stuff, Bloomberg, whatever. It doesn't matter. Stay away from all the chatter, okay? Look for relative strength, weakness. Go with the trend. And do not be stubborn. Right? And here's my 10-point game plan. Zoom out on the bigger technical image, depending on whether you're swing trading or investing. Focus on trends and trend rotations. Like to trade runner-ups into trading into earnings. If you're swing trading, do not hold swings into earnings. You can only do that via options. Zoom in on the technical time frame where the pattern is forming. Remember, patterns form on different time frames, so make sure that those time frames are your friends. Don't overthink. Establish your trading parameters clearly. That's my entry, that's my stop. I want to see it here, run to this target, but it needs to be technically sound, not wishful thinking. Oh my gosh, I wish Apple goes to the moon, right? Or Bitcoin goes to 100,000. 10 investing rules, environment. Analyze the environment, whether it's a high risk environment or a low risk environment. Pay attention to seasonality, earnings. We're in full swing earnings season right now. This is just literally week 2 of earnings. Be diversified, use limit orders for your entries. Always follow the overall market and industry group. Relative strength, weakness, here it is again. So important. Do not get out of a good trade. Let the market take you out. I'm going to explain that a little bit more in depth next time. Multi-time frame analysis has to be in sync and be aware of volatility. All right, here are my 6 technical, and sorry that I'm running out of time. I got to run through these very quickly. 6 technical trading rules. Trade stocks that have relatively high volume, guys. Look for an increase in volume compared to the prior days, 2 to 7. Trade stocks that have patterns of beating earnings. Look for fundamentally strong and solid stocks. Ideally, to trade stocks that are trading above the 20 or the 50 SMA, also look for zones of confluence that is overlapping key locations from multiple time frames, as they will generate that high velocity. This is how you're getting your velocity, aside from multi-time frame triggers. Stocks and ETFs must have at least 1 million shares per day traded in order for me to trade them, at least, and sharp pivots have an increased risk of failure other than rounded bottoms, right? We're going to results. Like I said, you can see my results on the TradeOutLoud website. Go under my services and scroll to the very bottom of each page, and you're going to see my transparent results. I have a really special offer for you guys today. We have a wealth generation, swing trading, and active investing course that this is our flagship course. This is actually how we launched TradeOutLoud back in 2010, 12 years ago. This is a 5-day course. It is live, where you're going to learn how to swing trade and actively manage your portfolio, your investing account, your swing trading account. You're going to learn how it's done, find entry, scan, powerful patterns that are delivering above average gains. You're going to learn precise, entry stops. You're going to learn more about position sizing, which is going to make you or break you as a trader. You're going to learn about risk tolerance. You're going to learn how to read the market internals and know, okay, so I'm looking at the Qs first, or I'm looking at the SPYs, or am I looking at both, right? Or am I looking at all the market indices under the hood, and based on that, I'm taking my trading decisions, right? Because that's how it should be done. And we're literally going to teach you how to trade stress-free. Good investing actually begins with investing in yourself, right? Also, I'm going to really go through this very quickly. With this, so the class is August 1st through the 5th. It's from 6 to 8 p.m. Eastern. It's 2 hours live. The course is going to be recorded. You're going to have free access to the Stock Swing Trader for 3 months. The course education is $5,999. We have an early bird for you available that the deadline is actually July 22nd, 2022. We're already just literally booked for this course. We have very limited seats available, like seriously, very limited seats. I don't take a lot of traders because if, there are questions, and if there are any questions or phone conversations, or if we need to get together, then, we have to allocate time. So anyways, $1,000 off. We never do that, but here it is, $1,000 off the course. Plus you get 3 months to in the service with me. If you're interested, you go to TradeOutLoud.com/swing. You're going to see the full price there. So if you want the $1,000 discount, email me at info@TradeOutLoud.com. So email me for the discount at TradeOutLoud.com. Like I said, very limited seating. With this course, we really don't do a lot of advertising or anything or marketing around it or send emails because it's every single quarter it's fully booked. So TradeOutLoud.com. All right, just email us TradeOutLoud.com to take advantage of a $1,000 off course. Like, wow, seriously, very generous. All right, so thank you so much, everybody. And I'm pretty sure if you have questions, you could email me at info@TradeOutLoud.com.